Okay. Hi, everybody. If you guys see me dancing to that song, it's because y'all getting ready to stress me out for the next 2 months. And I'm going to be working 12-hour days for 6 days for 2 months. So I'm kind of like giving myself a pep talk that he is enough to take care of me during this time as he has. We're going to go ahead and get started. We have a lot to cover. We have a lot to cover today. We are going to be talking about how to get ready for tax season. We are going to be talking about multifamily investing. 2 of our clients in the Wealth Building program are here. Ben Gray, Sonia Rockville, when you guys are ready, please just give thumbs up and I will highlight you. You're not speaking now, but it's just to get you guys into the highlight. Before, I know it's all for the love that I couldn't at night. Trust me, at night, I think about some of you guys' returns and I wake up and start doing calculations. So I'm happy to do what I do. Let's see here. Okay, so now I can't see how to do the spotlight video. Hold on. I'm looking for where to do the spotlight and I can't find it. If any of the co-hosts can find it, please let me know. I don't know why I'm not seeing this. Okay, I can spotlight Sherman. And then I need a spotlight also Sonia. I'm looking for, okay, there's Sonia. Why am I not able to spotlight Sonia? Oh, Sonia, you need to start your video in order for us to spotlight you. Okay, so I'll just wait for you to come on. Okay, there you are. Okay, let's try this again, Sonia. Okay. And then me. There you go. All right, everyone. We are going to start by hearing from the Dean of realinvestors.com. Dean of everything. Sherman has been my mentor from day one. If there's anything I know about real estate today and how to offer my service to real estate investors, it's because I learned under the best Sherman. I attended his club since 2005 and I've been a member ever since. So a lot of things that I've learned and I'm bringing to you guys is as a my participation in that club. So I want to welcome Sherman. We do want to have him talk a little bit, there's this whole buzz about AI and how it affects real estate. So I'd asked him to come on really quickly before we get into our meeting. He has a series that's coming on. So I just wanted him to talk a little bit about it. And then we will have Ben Gray present and then we have Sonia at the end. Hi, Sherman, you're on.
Hey, Bear, thanks for having me. And it's been a wonder and a pleasure. I just wanted to make sure that you're not waking up in a cold sweat because you think maybe we put something on our return we weren't supposed to put on it. We're on our way into the bad house. So.
Trust me, you would not be a client if you're trying to put stuff on there that you
should. Thank God for that. So in any event, it's a pleasure to come on. I'm going to be real quick, but it's sort of funny because Ebere and I have been sort of chatting back and forth. And I know as she goes into tax season, it's like this vault comes down over, you can't get to her. And so she was asking me about this list. She had acquired through one of her clients a list of email addresses that she wanted to market to. And it is oftentimes the case, I come to Barry for advice and she comes to me for advice. And she's like, well, Sherman, how do I market to this group of people that all I have is an email address? I don't have a phone number. In some cases, I don't even have a name. And I said, well, if all you have is email, you probably don't have permission. And up until about 4 or 5 months ago, a list of email addresses would have been totally worthless, no matter how you got your hands on that list. But I said to her, I think there's a couple of different ways you could probably take that list of just email addresses and begin to not just market to them, but actually get engaged in conversations with them. She said, how? I said, well, I've just started this series on teaching people how to use artificial intelligence. And in fact, I did a workshop last week. Some of you may have seen it. Let me just go ahead and share screen real quick. Some of you might have seen this. It's on our Facebook pages. It's on our meetup pages. but I literally just did a workshop last week called The 7 Ways That Artificial Intelligence Will Change Real Estate Investing in the Coming 7 Months. And what's most interesting is I just gave this not even a week ago. During the presentation, I made some predictions, as I'm sort of prone to do. And already within not even 7 days, much less 7 months, many of those predictions are already starting to come to fruition. Like one of the things that I said was, you can expect just sort of this, what I call the artificial intelligence wars, and the artificial intelligence wars have already begun, meaning up until now, artificial intelligence has really had limits on it. So some of you may have heard of something called ChatGPT. Just a quick show of hands, a thumbs up, or just wave if you've heard of this thing called ChatGPT. So ChatGPT actually is not live artificial intelligence, because the people who created it, it's open source and people created it, are afraid to let it outside of its glass cage. So ChatGPT is great to hear about, but it's not a very effective tool for us as real estate investors, because ChatGPT was closed off in 2019. So ChatGPT doesn't know anything about world events since 2019. And the reason for that is because the creators of ChatGPT do not want this sort of beta version of artificial intelligence out there in the real world, growing and learning at an exponential rate and possibly controlling different sorts of networks, et cetera. They understand the power that is possibly unleashed. So ChatGPT, they sealed it off from the real world in 2019. However, several companies have already gone in and gotten the source code from ChatGPT, and they've continued to build on it, but making their own proprietary tools, some of which we've been using over the past year. So some of you may have heard of something called Jasper. And just last week, Jasper released their Jasper chat, which is a free version of Jasper. And I'll share with everybody how to get your hands on it. And unlike ChatGPT, it actually has knowledge of what's happening in the real world. So what does all that mean? As a real life example, how many people in here are real estate investors, aspire to real estate, be real estate investors, or have done some real estate investing? So everybody, looks like everybody's hands. So I'm in the right place. I'm with the right crowd. So if you've done any kind of real estate investing of any type, from time to time, you probably needed to do something called skip tracing, where you're trying to find the owner of a property, you're trying to hunt down a tenant who owes you money, whatever. And if you've ever done skip tracing, you know what an expensive and frustrating process it can be. So Ebere said to me today, as a matter of fact, she said, Sherman, I got these email addresses. I don't know what to do with them. I said, well, give them to me. And I took one. I just took one because I didn't want to do the whole thing without her permission. It's her list. But I just randomly picked one, and all I had was the email address. And within 2 seconds, my artificial intelligence program gave me the person's full name, their phone number, and their physical address. And if I'd asked it to, it probably could have given me driving directions to their house. And if I would ask it again, it would probably even sort of trace this person all over the web and all off the web, because all of us know we leave digital footprints. So one of the ways that artificial intelligence is really going to be changing the world of real estate is real-time skip tracing. Not only skip tracing to find the person and accurately find the person, but real-time skip tracing to then put a tag on somebody, or what we used to call a bug in the old days, to actually continue to track that person wherever they go. How many people sort of love that idea of being able to have real-time skip tracing that's 100% accurate, can also put a bug on somebody and track them? And oh, by the way, no additional cost. See, most of us who have skip tracing programs are probably paying per skip trace. So that's just one of the 7 ways that artificial intelligence is going to be radically changing the real estate investing world. So I just want to come on, talk folks about it, let folks know that we do have a workshop if anybody's interested. Now, what I've done is I've taken the workshop that we already did this past Saturday, and we put it up on a website, and you guys can access it. Let me just go ahead and share this real quick, and Ebere, maybe you can type it into the chat box. But if you go to www.wealthbuilding workshop, you can access the training. It was an hour and a half, and then another half hour of Q&A. It was 100% pure content, pure training. But in that workshop that I did, it was very high level. I didn't get into any details. I'm going to be doing a follow-on series So if any of this is interest to you, I'm going to do a follow-on series where each one of the tools I talked about, which is either free or very, very low cost, I'm going to do a specific 1 hour workshop just on each one of these tools to show folks how they can actually use them. And if you'd like to be a part of the ongoing series, just simply go to wealthbuildingworkshop.com. It is 100% free. From time to time, I do charge people stuff, but Ebere does stuff for my group for free. I do stuff for Ebere's group for free. So it's 100% for free. And if you just simply go there and register once, you'll get the notices of any of the future workshops that we do. And more importantly, if your schedule doesn't allow for you to be there live with us, you'll also get the link so you can watch the recordings, and we'll keep it out there for as long as possible. But this whole space of artificial intelligence is changing at such a rapid clip. I'm going to be very honest with you. I probably have to redo the whole series again in about 6 months. But if you're not paying attention to this area, chances are you're going to be wasting a lot of money, because a lot of the tools that you're probably using now are going to wind up being free. You're no longer going to pay for a separate skip tracing service. You're no longer going to pay for a separate CRM service. You're no longer going to pay for all these little individual things that sort of add up, $90 here, $200 there, $500 here. You're not going to pay for that stuff anymore. Artificial intelligence is going to do it all for you. And at some point in time, you're going to stop. You're definitely going to stop paying if you're using any kind of virtual assistant or real assistant. You're definitely going to cut their workload in half, because a lot of the stuff that we use virtual assistants for, we're not going to use them for. We're going to use artificial intelligence. We're going to use our own artificial intelligence source, our own artificial intelligence bot. And of course, ultimately, you'll get to the point where if you're an iPhone user, you'll just simply say, "Hey Siri, go find so-and-so," or "Hey Siri, go follow up on so-and-so," or "Hey Siri, remind me when the closing is and wire the money." And Siri will do all of this stuff, but we're not there yet, and it's going to be done incrementally in stages. And I'm going to talk about how these tools one day are going to all sort of just be aggregated up into, either Siri or Alexa. Some of you may heard Microsoft 2 days ago invested $10 billion in open source AI and ChatGPT to take a piece of ChatGPT and make it private. And I predicted this when I did the webinar. I said, Microsoft, who's way behind in search engine technology, is going to leapfrog ahead of Google by simply integrating artificial intelligence. I made that prediction that would happen during the coming year. It happened in less than a week. So a lot of this stuff is just moving very, very quickly. And if you're not staying on top of it, you are going to get left behind. If you're not staying on top of it, you are going to overpay for different tools. And if you're not staying on top of it, your competition is going to be using it to basically beat you to deals. So, that's all I really had to say. I really wasn't here to sort of make a commercial. I just want to make folks aware of it. And anybody who wants to come on, listen to the recording I did this past Saturday for free, go to wealthbuildingworkshop.com. And of course, anybody who wants to be a part of the ongoing live series and be there when I'm doing it live, again, just go to wealthbuildingworkshop.com, and we'll make sure that you're also included and invited to the future sessions. That's all I got.
All right, thank you, Sherman. If you have any questions for Sherman, please post on the chat. I know that other people posted. I know Sherman has another meeting, but if you're able to hang out, because I know that you're also in the commercial space, just in case people have questions too, that's great. I'm going to present for a little bit, and then I'm going to give Ben Gray some time, and then we'll continue. Just sharing the screen here, the things that we need you to know about tax season. We've started accepting returns. You can upload all your documents into the portal. We are not fans of having people send us their documents by email, although we will accept it. In this day and age of, cyber crime and all that stuff, you definitely want to be careful about sending your stuff by email. So you can fax it to us, or you can share it on the Secure File Pro. If you have not yet completed your 1099 filings, yes, the deadline was last week. If you missed the deadlines for filing the 1099s, you still have time to get it in. We have not seen the IRS impose any penalties for not filing your 1099s after the due date. One other thing that I want you to know is that extending the time to file does not extend the time to pay. Right? This is very, very critical, that April 15th is your tax filing deadline, but December 31st is your tax savings deadline, and April 15th is your deadline to make a payment. So even if you're going to file an extension for later on, make sure that you're doing preliminary calculations to see if you have a liability, because you do want to have those taxes paid by the April 15th or whatever it is going to be this year deadline, and then you can deal with filing later on. There is no reason for any real estate investor to be rushing to get their taxes done by April 18th. If you're doing the right tax planning, like the people in our wealth building program, Ben, Great, Sonia, do their year-end tax planning in November, December, April 15th really should not mean anything to you. Why? Because you've already looked at all your stuff before year-end and come up with some tax saving strategies. So before we move on, I will have Ben Gray come up. Ben has been my client for a long time, I think way too long, right, Ben?
Probably a decade.
Yeah, so, and he started, from scratch, and he's grown. So I just wanted him to talk a little bit about what he does in real estate, what he does in the commercial space. If you do want to contact him afterwards, feel free to reach out to me. So Ben, you can go ahead, tell us what you're doing right now. What are you doing right now in the commercial space?
Yeah, cool. Thanks, Ebere. So basically, I'll give you a tiny bit of background and context and then, tell you what I'm doing now. But as Ebere said, I've been working with her for about 10 years now. We met at the New York City RIA, and, it's been great. And I sort of started a business doing similar to Roofstock, if anyone's familiar with that company, helping people get into turnkey investment properties. And I was mainly helping foreign nationals do that. If you can tell, I've got an accent. I'm Australian, so I was helping Australian investors do that. And that was good for a few years.
Yay, diaspora.
That was good for a few years, but basically the interest in buying dirt cheap American properties, stopped when we recovered from the great housing crash. So I kind of focused on tech, which has been my other hobby for the career, I should say, for the longest time. And then the last few years, a good buddy of mine's been very big in the multifamily space, doing big apartment syndications. And I had a lot of experience in real estate and marketing and everything, and I kind of came together with him. And that's where I am today. So, he's much bigger than me. He's secured about 700 million in acquisitions over the last 7 or 8 years. We've done about 70 million together over the last 18 months. And we've got our current deal, which is based in Phoenix, Arizona, called the Lennox, that we're raising capital for now. And basically the way the business works is we'll, agree with the seller that we want to purchase this asset. In this case, it's about 20.3 million. It's 88 units, and we'll get debt to purchase that, but we'll also raise money from investors, like people on this call, like anyone who we can find through our marketing efforts on the internet. And most investors, the minimum investment's 50K. Most investors will come in for, on average, it works out to about 80K. We'll get maybe 100 investors per deal to bring the equity that we need to close. And then it's just a fancy fix and flip, just like you're fix and flipping a single home. We would come along, we'd extensively renovate the outside, we'd do the landscaping, fix the roof, give it a new lick of paint, new signs, all that good stuff. And then from there, anytime one of the tenants moves out of the unit, we'll go ahead and renovate that unit, put in granite countertops, so on and so forth. And the whole point is just to push up the, the value of the rents that we can achieve for that asset. And that pushes up the overall net operating income. And when we sell in 3 to 5 years, that's basically how the asset gets priced based on how much income it produces. So I'll kind of pause there. That's a huge amount of information to dump on everyone, but that's kind of the business plan in a nutshell. And I don't know if Ebere were taking questions, or if you want to guide me on different topics you may want me to cover for the benefit of the group, but I'm here to help.
The reason why I definitely wanted you and Sonia to come on is it's one thing for people to say they're doing real estate. It's another thing for them to meet with their CPA and they're doing it, they're doing very well. And I want to learn what they're doing, and I want you guys to learn what they're doing. I've seen your income increase over time, just getting involved in the commercial real estate. What are the sources of income that you've generated just being in this commercial property space?
Yeah, well, just being in this commercial property space, basically the way it works is there's a bunch of fees that get associated with a deal like this. And trying to think of how to communicate this in the most simple fashion without confusing the heck out of everyone. But basically there's an acquisition fee up front, and that's 2% of the value of the asset. So if it was, $100 million asset, nice, huge round number, $2 million would be a fee that goes to the people who put the deal together, which is me and my business partner and the team around us. And that's an income stream, and that's the predominant income stream that pays the rent and pays the bills. And then we get essentially equity in the deal. So long story short, 70% of the profits of the deal go to the investors, and 30% of the profits go to us as the general partners for putting the deal together and selling it for a profit. And that's how we make our money in the long run. But that takes, of course, 3 to 5 years, depending on how long you hold the property for. But that's kind of the income streams. But then if you kind of go deeper within the property, we're doing all sorts of stuff. We're adding washer dryers. We're adding a lot of value add assets to the property, like dog parks, playgrounds, things like that just overall increase the rental income and the income that the property itself produces.
Thank you. And then I think Sam had a question. Do the investors also get cash flow?
Yeah, so we've got 3 different investment classes that we offer on our deals, and one of those is pure cash flow. So you get maybe 9%, sometimes as high as 11%. Pure cash flow. So if you invest $100,000, you get 11% of that, 11 grand per year, and that'll continue for the life of the deal. And of course, you get your initial investment back. But the really cool thing is you get depreciation as well. And year 1 depreciation on this particular deal is 30%, 32% of your initial investment, and then it steps down from there to maybe it's like 25%, then 20%, then 15% for subsequent years. But the net effect really is that $11,000 that hits your pocket stays in your pocket because of that depreciation benefit. So it's a really great way to be able to have good cash flow and grow your wealth. We kind of pitch it like for much bigger investors that might come in for $1 million, they're going to get $110,000 cash in their pocket. But if they were to work like a W-2 job, you'd need to earn $220,000 by the time you account for taxes. So yeah, that's class A. And then class B, you get a 7% preferred return, which means as long as the property is producing cash flow, you're getting that 7%. Usually at the start, the property doesn't produce that cash flow because we've got to renovate units, we've got to evict people, we've got to get the property, up to speed. And in the later years, it does hit that, preferred return. So you'll get on average a 7% cash flow over the life of the deal, but starting small, ending stronger. And then a 70-30 split of profits on the back end if you take that option. And then there's class C, which is for larger investors that I won't get into here. But yeah, look, that's kind of how the investment returns work in a nutshell.
All right, so if anybody is interested in talking more with Ben Gray offline, please feel free to send me an email. If you have any specific questions for Ben, you can answer. James, I will answer your tax question when we're done with Ben, because I know he might have to jump off a little early. Camillus is asking whether you also manage the property yourself.
Yeah, and I can stick around for a couple more minutes, Ebere. I've told my other meeting that I'll be late a bit. We have professional property managers that are responsible for the day-to-day management of the property, and they take 3% of the management of the income that the property produces. And then we provide asset management oversight on top of them. So we're constantly chatting to them every week, like, hey, how many units have you leased? What's going well? What's not going well? Hey, we were going to get the pool repaired. Why is that taking so long? So we're kind of managing the managers, but we don't have to deal with the sort of, lease signing, broken toilet, day-to-day management comes along with it.
And one of the reasons why I like commercial, or that I got into commercial, I usually will do commercial with my clients. Like the last one we did with the self-storage facility, I wasn't involved directly. Again, like Ben said, it's like you're managing the managers. It's the fact that you don't have to pay any taxes until the property sells. And you possibly could even, with a partnership, choose to do a 1031 and keep it rolling over because of depreciation. And especially if you do depreciation and also do the cost segregation, you may not have, even though you're getting distributions, you may not have any taxable income until that property sells. So it's possible that you're getting all these benefits for 5 years and it's in the 5th year. So the time value of money, that money continues to grow. I love commercial. I love working with clients that I've seen doing it. They're doing very well in it. And that's why I wanted you guys to see, hey, this is this is touchy-feely. It's not just about saying, hey, you're a wealth builder. I want you guys to see that there are people making money with all kinds of strategies. And these people, the reason why I wanted to feature Ben and Sonia today is because they are pretty new to the commercial space, but they've done so well in such a short period of time. So that tells me it works. Sonia doesn't know Ben. Ben doesn't, they're meeting each other for the first time today. So that's how you know that this is real information. Although I see a commonality between both of you. I think that my New York clients, you guys are kicking it. You got Maryland people, we need to step up our game. I see my Florida people, my North Carolina, I see California, we need to step it up. I just realized that both of them came out of the New York City area. All right, does anybody have any other questions for Ben before we move on?
Yeah, and if there's no questions, I'll say, do hit up Ebere. We have like a cool webinar. We've got a prospectus. You know, if you want to see a little bit about the deal, you know, you can check that out. No high pressure sales tactics. But as well, if you just want to ask questions about, you know, how I got into the industry or stuff like that, I'm happy to jump on a quick call with anyone as well, Ebere.
Thank you. And then the tax benefits of having rental property, especially multi-unit, is just what I said, being able to take advantage of depreciation. So you very well could have cash flow, but not have any taxes to pay for a while. If you're interested in contacting Ben, please, Ben, you can put your information in the chat. Several people are asking about it. You guys just let Ben know when you talk to him, because I usually don't like to violate, you know, my client's privacy and all that. Please let them know that you were with Ebere on the webinar, so that he knows where you came from. Otherwise, we try to be very careful about our client, you know, people contacting our clients just off of talk. The last question is, what is your regulatory responsibilities and do you outsource that? I guess it's like your filing compliance requirements with SEC tax, you know, on all of that. How do you handle that?
Yeah, so it is an SEC registered 506C offering. So we have to make that registration right at the start of the investment. And I can talk about everything. That would take a long time, but that's something that happens. And then there's a bunch of other filings that we have to do, but it's not as onerous as you might imagine. It's not like owning a REIT or you know, something like that. So a lot of the reporting is more focused on what we provide to investors. So we provide detailed monthly reports, detailed quarterly reports with financials and all of that information. And you know, truth be told, there's not a lot of regulatory reporting that goes on with this deal, which is both a positive and a negative for the industry, because there's a very low bar for a lot of operators to get into this business, which, you know, I could talk about as well. But anyway, I digress. That wasn't the question.
All right. If you're interested in hearing more of these kinds of webinars with my clients, please, you know, it's up to you guys to provide me with feedback. If you say, hey, I want Ben on for a whole webinar, you know, this little 10 minutes, or with Chairman, this little 10 minutes is not enough, and I would like to have them for a whole webinar, let us know. This is the wealth building plan is client driven. Our webinars are client driven. I am just sitting at this seat, just doing whatever it is that you guys want, because guess what? We're all building wealth together. I just don't want to shove anything down your throat. I want all of us to do this together, because as we do it together, we succeed. So if you guys like this kind of conversations, or you want Ben to come back for a full hour, we can schedule it. After you hear Sonia, same thing. If you heard from Sherman, just give me feedback on what you want. So continuing on, there are several documents that you need to send us. Let me talk about those that have businesses. If you have businesses, rentals, I do want you to send us an Excel spreadsheet, either from QuickBooks or that you've prepared that has all your income and expenses. A lot of people don't know that there's a difference between bookkeeping and tax preparation, right? Bookkeeping and tax preparation. A lot of people think that it's the same thing, but it's not. If you bring me a shoebox, you're asking me to do bookkeeping. If you bring me bank statements, or if you send me like a list of all your expenses, you're pretty much asking me to do bookkeeping first, and that would cost you, right? But if you have already prepared all these things, we have an Excel spreadsheet we have one for rentals, we have one for the businesses, we have one for if you have like multi-properties and all that, we would prefer that you present these things in a bookkeeping format. We do have a bookkeeper on staff, Alima, who is more than able to assist you with getting your books together. So please make sure that you have it. We would prefer that you send us your documents when everything is completed, but if you can't, that's fine. You can send it all as once, okay? Let me share some more things, then we'll bring Sonia out and then we wrap up. If you set up an entity this year, we need your EIN letter, your articles of organization, your formation documents, the operating agreement, the articles of acceptance from the state showing. If you purchase property this year, but it did not sell because it's an investment, or you did not rent it out or have it available for rent, it really doesn't count for the 2022 tax return. So the only rentals that we will be looking at or preparing are rentals that are already existing or that you placed in service. Remember that a property placed in service is different from when the property is actually rented. Placed in service means that it is now available for rent. You get it listed, you put up your sign. From that point, you can start taking deductions. Anything up until that point would need to be added to the cost basis of the property and depreciated. Okay, there's some tax strategies that we can still utilize even if you didn't take advantage of the year-end tax planning. You know, different things like contributing to a retirement account. We can do the cost segregation. We can do a contribution. No, I think the solar deduction was 1231. So there's little things, even income splitting. We can also move you from an LLC, single member LLC, multi-member LLC to an S Corp in order to reduce your liability. These are still strategies that we can utilize now before 4/15. But the best time for you to really be working on your taxes is November, December. Okay. We do have our engagement letter and standard list of questions. Even if you're not ready to file your taxes yet, I encourage you to reach out to David so that we can make this link available to you. Go ahead and get your engagement letter completed. Go ahead and fill out your list of questions, both the business and the standard. That way it kind of gives us a sense of what you have coming during the year. Absolutely, we are going to file a lot more extensions this year than we did last year. If we don't have your documents by the end of March, more than likely you're going to be extended. If you're a complicated client, I'm talking to all of you now. If you are a complicated client, meaning you got more than 8 or 9 properties, if you don't bring me your stuff by March 15th, we will put you on an extension, no questions asked. Because guess what? I want to give you the best possible result that's available to you legally. And I don't want to be rushed. During this season, we're tired. We have to attend to a lot of people. But as a real estate investor, you really should not be going for the big rush. You really want somebody who will take the time with your return. So it's either you're doing it early or file an extension, make your payments, and then have from May all the way till September, October to get your taxes done. It's never a good thing to try to be rushing against the deadline with every other person. You know, as an investor, you're a wealth builder, and I don't want anybody that lies to you and say, hey, we can just do your taxes without any problems. Towards the last 2 weeks of the year, it is possible to be prone to mistakes and not even having time to properly review your return and come up with strategies. So that's why we're encouraging you to try to look at your returns on time. The deadline for filing, we'll do this and then I'll turn it over to Sonia. The original deadline for the 1040 is April 17th, 2023. The extended deadline is October 16th. For the partnership, the original deadline is March 15th. 99.99999% of our clients do not meet this deadline. So we've already started putting in extensions for all the businesses. And then the extension for the partnership is September 15th. S Corp extension is March 15th. Extension deadline September 15th. C Corp April 17th. Extension deadline October 16th. For nonprofits, it's May 15th. And extension deadline is November 15th. And then the payroll forms, we talked about it, payroll forms 1099, all of that is January 31st. So I will stop sharing my screen for now. I'll answer some questions on the chat, but we are going to go ahead and turn it over to Sonia. Sonia, Welcome. Please tell us what you do in the multifamily space.
Thank you for having me. Hello, everyone. My name is Sonia Rockville. I am the principal and founder of Bedrock Real Estate Investors, and my company purchases multifamily apartment buildings. We do that by way of syndication. So we pull together people who want to invest in our properties, and we pull together their funds, purchase the properties, and then we also hire third-party property managers to manage the properties and asset manage them. In some cases, and in one of the markets that we've entered in recently, my business partner is a property manager, so we will utilize their firm to help us with the property management of the property. Just by way of a little bit of background, I started out my career in accounting, and I'm also a CPA, but as you can see, I'm not a tax CPA, and that's why I hire Ebere to manage our tax accounting for what has now been almost the past 10 years. I've also met Ebere through the RIA NYC, and I'm happy to be a client still of hers. She helps to manage the growingly complex tax forms that we have, because we have quite a few K1s. All of these are the tax forms that you get as an investor in multifamily or some of your other deals. So for us, we focus on, although I live in New York, focus on purchasing properties in the Southeast. We are looking at markets where we believe that there's a good potential upside, and that we are able to maximize value for our investors. In addition, I'm also working with people on a consulting basis to help them if they're looking to do multifamily deals or syndications on their own, and are looking to expand beyond being an LP or passive investor and want to do their own multifamily investing. So that's a high level of what my company does and what I've been doing recently. And special thanks to Ebere for growing with us over these past several years.
You're welcome. I know that when you started, I think you guys were like in like several partnership and stuff, and you're kind of like venturing. What made you decide to now get into this fully? And then, just like Ben mentioned, can you tell us the different sources of income that you generate from being in the multifamily space?
Yeah, so one of the things, I mean, just being in New York, growing up in an apartment building, you know, one of the things when I thought about, and also just some of the guidance from the our leader at the RIA, who really drilled in, you have to have a strategy, Sonia, of what it is that you want to do. And so when I looked at the different strategies, for me, multifamily made the most sense. I knew that it would be challenging to invest inside of New York as a multifamily owner. So that's why I looked outside of New York, because I was looking at landlord resident laws. I was looking at business friendliness, and those are some of the things that factored into that. But for me, multifamily really made sense because I really like the economy of scale. The fact that you have that concentration of, you know, 50, 174 units all in one place, or spread over, you know, a few parcels that can be more easily managed. And that was what makes most sense for me. For syndication, or just being an operator of the multifamilies, there are different streams of income. Part of it is the acquisition fee, which is that upfront fee that you earn for identifying and pulling the deal together. There's so many aspects of that, the hours of analysis that you're doing, and the many deals that you don't do because you don't want to move forward with them. But overall, bringing the properties to the investors, and you get the asset management fee. I'm sorry, the acquisition fee. Then the ongoing management is the asset management fee, and then you get to participate in the split of the cash flow from the property as well.
How do you decide on which areas to invest in?
Which markets?
Yes.
Yeah, so there are a few things that I'm looking at. I'm looking at different trends, and part of that is I'm looking for population trends. I want to see that the population has been going up. I'm looking for employment, a job and job metrics, unemployment rate trends. Those are also really important. And then I also look to understand what's happening in the local economies, and also I look at areas where I have some familiarity with, or I have a connection or a contact on the ground, someone who can also help to give me insight in addition to property management.
All right. Do you only seek accredited investors for your offering? I know that Ben seeks only accredited, so can you talk about that?
Yes, for me, my investors could be both accredited and non-accredited. I have 506B investments to date. So, you know, if you're interested in finding more, you know, you'd have to contact Ebere, you know, to talk to me. But our investments are open to both accredited and non-accredited.
Okay, does anybody have any other questions for Sonia before we move on? Or any questions about multifamily? Or any comments about multifamily before we start winding down here with the tax preparation?
Okay, well, I'll be on for a little while, so if somebody has a question, just let me know.
Yeah, Samantha wants to know about cash flow.
Okay, I'm not.
Like, what kind of cash flow would you expect from like multifamily? Is there steady cash flow, or is it more of like, you know, kind of a little bit now and then more at the end? And
yeah, a lot of it depends on the strategy. So most of the times we're purchasing properties where there is a value add component, meaning that we currently cash flows are at a certain level, but we expect to be able to increase the cash flow with the work and improvements that we're doing on the property. So usually the way it will work out is that there will be a lower amount of cash flow in the beginning of the deal, because that's when we're focused on executing the business plan. That's when we're focused on doing updates to the property that will drive greater cash flow. And then by doing that, we're then increasing the value of the property. Then we can get higher rents. And then ultimately we will be able to sell the property at the higher projected amount that we're looking for. So I would say cash flow there, we do have cash flow on our deals. It's usually it usually scales up during the hold, because in the beginning there's a lower amount due to the fact that we're implementing our business plan at that time.
all right, which states in the Southeast currently meet your multifamily investing criteria?
So right now I'm looking at Georgia, Alabama, and North Carolina.
Yay, North Carolina. I'm sorry, Georgia and Alabama. My kids want to move to North Carolina. My best friend is in North Carolina. You know, we're always there every year. So, okay. Somebody said, are these wholly owned, or do you prefer equity deals?
So these are, well, I mean, we have our investors, our investors are providing, and ourselves, we're providing the equity to purchase the deal. I'm not sure if that's answering the question. Let me know if I misunderstood that, but we also, you know, we get debt on the deal. So you know, we have the lender as well as our equity that we're bringing into the deals. If that answers.
Okay, somebody's asking if they can have your email. If you know, it's up to you. They can go through me, or you can post it here. Either one is fine. You just mentioned that you heard about Sonia from the call, so that we're not dealing with spam and all that.
Yes.
Somebody asked about the low-income housing properties. Do you do any of that in the multifamily space?
So not yet. But that is an asset class that I do find very interesting, especially at this time. But you know, that the LIHTC or low income housing tax credit is a very unique type of product offering. So thanks for asking that.
All right, and then yeah, I think Carmela's asked a really good question, because I know we've had to talk about these structures in a while. Can you kind of let us know the ownership structure, because I know like we have the management LLC, then we have the LLC that owns the properties, then you
Right.
have the overall with the investors. So what's
Right.
how are these multifamilies held?
Yeah, so usually the way we set up the properties is we'll have one LLC that is the owner of the property, and that's where all of our investors will invest in, and that LLC owns the property. It's housed in there. Then separately, as sponsors for the deal, we have an additional LLC. That's the management LLC. This is separate from the property management, but this is us as the managers or the sponsors of the deal. And we set this up so that we can enter into contracts or agreements on behalf of the LLC. And it also separates any of the fees or cash flow splits that are going to the investors versus that are going to the managers.
All right, thank you. If you have any questions, please continue to post in the chat. We will have Sonia address them later on. Want to finish up with this key tax law changes. There are tax bracket increases for all filing statuses this year. So just increased by a little bit. There's all of the retirement plans have additional funds that you can contribute. For those of you that don't know, you are able to set up a solo 401k by December 31st, but have it funded up until the extension filing deadline. That's really one way that you can reduce your tax liability. Ben, Sonia, they all take advantage of contributing to the solo K, because one benefit of contributing to the solo K is one, you get to reduce your tax liability, but two, you grow your assets in there enough, you can start doing real estate, including multifamily deals in that retirement account, and it's growing tax-free. I had a client who started with me with about $200,000, and now he's at 2.4 million. So it is, and this is over the 12 years that he's been my client. He didn't even know that a solo K existed. So it's possible for you to set aside, you know, some funds, invested, get the tax deduction. But more important than the tax deduction that you get for the solo Ks, it's the ability to be able to invest in real estate, because the solo Ks are self-directed. You get to direct your own investments. They're much better than self-directed IRAs, because with the IRAs, you're dealing with the trustees, you're dealing with the annual fees and all that. The solo K, it's really, you know, set it up with the administrator at the IRS, get your EIN number, open up your bank account just like any other regular business bank account, and you're good to go. And you can also do a brokerage 401k. Okay, traditional IRA rules has restrictions. There's limits to contributing to the Roth IRA. We have the standard deductions. There's still no limitation on your itemized deductions. Personal exemptions remain unavailable. HSA contributions go up, and capital gains. Remember that if you taxable income, we're not saying AGI, taxable income is less than 40,000. You can get away with not paying any taxes at all. This is a strategy that we utilize. That's why year-end tax planning is important, because if you're able to have capital gains of 150, it's possible that by the time you do your itemized deductions and other expenses, we can get you under that limit. If you're married filing jointly, it's under 80 grand. If you're single, it's under 40 grand, and you end up not paying any capital gains taxes at all. Okay. The child tax credit, you know, is still enhanced. It's been reduced for this year. What else? Again, the major thing I really wanted you guys to know about is our plans for the year. What we have coming up, the mileage rate has been split between, because the mileage rate changed at the middle of the year. So when you present your miles to us, you have to present your miles up until June, and then your miles from July all the way till December. We just wanted to bring you all this information as you're getting ready to file your taxes, just to help to streamline the process so that there's not a lot of going back and forth. Again, we are here to help you as possible. Okay, so somebody asked, get a copy of the document. I'm glad you brought that up. That tells you that this person is not my client. You need to let them know, become Ebere's client. If you're Ebere's client, you would have gotten this in your portal, and we also sent it out. But I will make this available to everybody that is on the call. So we're going to send our tax season letter. I will also send that along with the rental spreadsheets. I'll do it as a link. And then we'll just keep answering questions until we're done. So let's go back and start from the top. What are your predictions? Okay, so this is for Sonia. What are your predictions for the upcoming year in the multifamily space? How are operators managing in this world of higher interest rates?
Yeah, so that's a really complex question, and I would say a lot of it depends on your market, where you are, and then also you know, what your overall strategy is. But for me, I'm still continuing to look for properties to purchase for this year. I am still very cautiously optimistic about what's going to happen over in the next several months for multifamily. I would say, you know, the most important things for you is to understand the market, the sub-market where you're investing. Be very cautious as you're looking at rent growth and projections, and have adequate reserves.
Okay. Joseph wanted information on the electric car vehicle. So if you bought a vehicle, you can get a tax credit of up to $7,500, and it all depends on the battery and all that. And also now they are adding on being able to get a credit for existing vehicles as well. So there's a new law that came in this year where you are able to get a credit for existing, you know, older models, not necessarily new models. Okay, let's see. Okay, let me read out what James says. Yes, if you're not Ebere's client, please schedule a meeting with her. She and team have been great to me and my wife since I joined. See, that's my new best friend right there. Right there. Okay. I'd like to set up okay, so for those who want to set up the solo 401k, Larvon, could you email me, or let me write this down here. Send Lavon 401k registration form. Lavon, just to be sure, can you let me know if you generated business income this year? Oh, let's talk about that for a second. There are two ways that you can use a solo 401k. You can make contributions to it, right? Based off of current earnings, you can only contribute earned income into the business. But you can also roll over existing retirement accounts into the 401k account. So you want to make sure that you have earned income subject to self-employment taxes that you can use to contribute, or that you have an account that you want to roll over. Okay. All right. So Lavon and Merlin want us to send them the solo pay registration form. Got that? I will have Jade send that out to you. All right. And then how long do we have to amend the tax return, and how would we know if amending will be worth it? I am not a fan of amending tax returns, but legally, IRS law, you have up to 3 years from the filing date. So let's give an example. This is 2023. So 2023, 3 years back is what? 2020. That means the 2019 return, you have up till April 17th of this year to file an amended return for 2019, because 2019 was due in 2020, and you have 3 days from the filing date to amend. So that's how long you have. That's also the same amount of time that you have to actually file a return. So if you have not filed prior years, let's say you haven't filed 2019, you have up till April 17th of this year to get your 2019 file. In addition, you also want to pay attention to what we call the CSCD date. CSCD date is the date after which the IRS is not required to enforce collections if you owe. That's also a strategy. If you have a ton of money that you owe the IRS, we work with several tax attorneys and several of my colleagues that do this all day long. You can use your CSTD date, which is 10 years from the date of filing, after which, if you still have a liability up until that point, that liability is going to go kaboosh. You no longer have to pay it. So one strategy could be, if you have this huge liability, make a payment arrangement with the IRS as low as possible and just let the 10 years ride out. And then after that date, they will not collect. A lot of people, you're not able to do like the offer and compromise, because if you have income that you're earning, they expect that you will be able to pay your taxes if you're earning income. But you can do a partial pay installment agreement, write it out 10 years, and then you no longer have to deal with the taxes. Okay. Thank you, Erica. Best CPA ever. Very personal. See, I love my clients. See, that's why I'm not advertising, because I know y'all doing the work out there for me. All right. Somebody wants to roll over. Yeah, Bernadette, if you want to roll over, you can contact us. The first thing would be to set up the 401k, and then you can now transfer to that. And if you want to invest, let's say you wanted to invest in multifamily with either Sonia or Ben or just another kind of real estate investment, you are able to do that. So contact me. I'll send you the form, but I'll also put your name on this list for Bernadette. Okay. Let's see here. Keep going. Regarding solo 401ks, you can roll over, but do new contributions have to be from self-employment? Yes, you can. And let me bring this up because this is very, very important. If you're a real estate investor and you have rentals, remember that most of your investment is passive income. But guess what? We can pay you a management fee from the rental income, and that management fee now becomes active income subject to self-employment tax, and you're now able to contribute to the solo K from that. So that's a very good strategy that you're able to utilize and being able to contribute using earnings. And guess what? If you make over $140,000, you're not even going to have the self-employment taxes to pay anyway, because Social Security caps out at the 140. You're only dealing with the Medicare taxes. So like that's one strategy to be able to contribute to a retirement account and not having to pay the self-employment taxes on earned income. So there's several ways to skin this cat, you know, that you need to take advantage of. Is the solo K preferred over the Roth IRA? Okay, let me answer your question and then make a correction. Yes, the solo K is preferred over a self-directed IRA, but remember that it could be Roth or it could be traditional, okay? So yes, we prefer the solo K over the self-directed IRAs because IRAs have a lot more restriction. You can't borrow from it, the UBTI, the trustee fees, but with the solo K, you're able to borrow up to 50% of the value of the account, or $50,000, whichever is higher. You're able to make contributions. You're able to invest in real estate without necessarily needing the approval of the trustee. All right, here goes Sam. Sam says, if you're not a client, hold on, what are you waiting for? Become a client, best team ever. So you heard it. All right. And then if you were in a payment plan and fell off and are working on reestablishing the payment plan, does the 10 years start all over again? Yes. If you are on a payment plan and you drop off, you almost have to start all over. Sometimes they'll make you sign an extension. Please, 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 please do not sign that without advice. Make sure that you're working with a tax attorney or a CPA such as myself to make sure that you're signing, because not every time you need to sign it. Sometimes you can not sign it and just wait it out, okay? I see somebody has their hand up from the 202-681-2257. Do you have a question? 202-681-2257. Do you have a question?
有，这样子的。
Okay, because I see your hand up. Okay, if there are no more questions, we are getting ready to round up. I love that Sonia is not only, and Ben, a lot of our clients are like that, like they're able to help out. I love the fact that Sonia has started coaching others to be able to achieve what she's achieved. Oh yeah, you know, Sonia, one question we didn't address, how easy is it to transition from residential to commercial? That would be the last question of the day, unless somebody has any other additional questions.
Yeah, it's really, thanks for asking that. It really is a difference in there's a shift. There is a shift because, for example, when you just look at certain things like lending, lending is very different, and getting financing is very different on the commercial side versus for like a single family or up to 4 units, because you're using your personal you're using your personal credit and your etc. You will need that information as well on the commercial side, but it is a larger scale. You'll need to have your balance sheet to be able to support the loan that you take out, and then also I would say just the level of support that you need to manage the deals in terms of like property management and the team that you need. It's less about everything that you're doing on your own, but also not less. What you're doing on your own is very important, but you also need to have a team with you, particularly if you're syndicating the deals.
Okay, are the benefits of multifamily real estate similar to other commercial spaces like event halls, brick and mortar businesses, etc.?
I couldn't really answer that because I don't know what the benefits are of like those other types of assets.
Those are still like businesses, right? Because it's really asking, you have to know how to evaluate the event management business on its own.
Right.
You know, somebody that's renting a hall compared to, because that's more of events. It's not short-term rentals.
Right.
It's not, yeah, you have to evaluate the business on its own, different from the real estate, I think.
Yeah, I think that's a great point, Ebere. Like I think for multifamily, I definitely think of each apartment as its own business with its own set of revenues and cash flows. But the business is renting out the apartments. So, similarly, you'd have to look at each of those types of other assets in that way as well. So I would say it's different.
Okay, do you use any internal financing for any of your deals?
Internal financing.
I guess maybe like working with people, investors, not just dealing with outside investors, but using maybe some of your own money. Like, would you?
Oh yeah, yes, we definitely put money in our deals for sure.
Okay. All right, Lorelei say these webinars are a great source to hire good service providers. Absolutely, because if you want any service, I can assure you, if it's in the real estate space, I almost always have a client who is in that industry. All right, what's usually your LTV ratio?
For the banks, that has changed over time. So in the past, we've gotten like 70, 75%. Most recently, it's just over 50%. So that's really changed because of the interest rates. Oh, you're on mute. You're on mute.
Oh, I'm sorry. I'm happy that we were able to get this done before it gets really busy. We will continue these in the summer. So if you have any questions, please feel free to reach out. It's been great talking with you guys, and have a great rest of the week.
Thanks, everyone.
Thank you.
Thank you.
Bye-bye, Candace. So when we get this dance, that means it's over? Guess she's over.